Are you interested in buying a home, but you don't have the funds for a down payment or closing cost? If that's the case, I've got great news for you. You might want to consider using a down payment assistance program to cover the cost of your down payment to purchase a new home. It sounds intriguing, right? Let's dive into what you need to know about down payment assistance. So what exactly is a down payment assistance program? Here's how they work. First of all, know that they're going to differ across the country. And in some cases, they're going to differ across the county of the state that you are looking to buy in. But essentially, a down payment assistance program is a program that's usually funded through the state or a city, and sometimes even nonprofits, where the monies are used to help first-time home buyers, or in some cases, repeat buyers that need assistance with their down payment and or closing costs. In general, they will have a loan limit, so a maximum loan limit. Many of them will have income limits. Traditionally, there are additional fees associated when using a down payment assistance program. The interest rates are specific to the program itself, so it's not the current 30-year or 15-year going rate that you would see online, because the program will post their interest rates. They all generally have some type of credit score requirement. Kind of think in your head a 640 seems to be kind of the line in the sand, but there could be a program out there that offers down payment assistance with a credit score lower. But in general, 640 is kind of what we see. One of the most important things to understand when you're evaluated in down payment assistance program is, are you obligated to repay the money that you're being given for the down payment and or closing cost? So think of it this way. If you're purchasing a $100,000 house, and let's say that the program you're using gives you a 3% credit towards down payment and or closing costs. So in that case, it's $3,000. What you want to know is, do you have to stay in the loan for a period of time before those funds are given? Does that money that you're given, does it take second lien position on the title to your house? All of this is going to be very important so you understand how quickly you could refinance. I'm not advocating that you wouldn't refinance until you've been in the loan long enough to be able to have those funds forgiven, because sometimes it makes sense. Let's say in 2 years from now, interest rates have dropped and you're interested in exploring a refinance. At that point, whatever the balance is on those funds that you were given, if you haven't been in the loan long enough, and again, each one of these programs is going to have their own rules, so I'm generalizing here, but the balance of that initial $3,000 that we were talking about in this scenario, let's say it's now down to $1,000. That balance could be refinanced with your first mortgage, and you could exit the funds due requirement just by the refinance. How soon can you refinance is really going to depend on a lot of different things. The market, if there's a prepayment penalty on the down payment assistance program, if you can refinance, what's the debt obligation that you would have to account for in the refinance, what's your credit score, what kind of strategy or home loan program makes sense for you on the refinance, and what's the current market rate of the home. All of that is going to kind of factor into how soon you can refinance after using down payment assistance when purchasing a home. Remember, each program is going to vary by state, and we lend in 42 states. If down payment assistance is something that you're interested in, please click the schedule link in the description below to talk with a KellyZitlowGroup mortgage advisor. We'd love to have the opportunity to get you on the path to home ownership. Now that we've got the down payment covered, what about closing costs? Be sure to watch my next video on what closing costs are and how they work. And don't forget to subscribe for more mortgage education.